This is a coin. Will it be a head or tail? Nobody knows. Friends, irrespective whether it is head or tail, if you want to succeed in investment, you must know the difference between trading and investment. So watch out this video. Let us start with the basic definition of trading and investment. When you buy something at a particular cost X and sell at a cost Y, if the cost Y is higher than cost X, you get profit. Vice versa, you can also sell at a particular cost and then again buy it when it comes to shares or commodity. Now let us talk about investment. With investment, you invest for a long term. You invest with a philosophy that the intrinsic value of a particular company, if it is a share market, intrinsic value of a particular stock, intrinsic value of a particular property or any other commodity will eventually increase, and that's how you will come into profit. Trading is basically a short-term view during which you know at which cost you have to enter the market and at which cost you want to exit so that you have a particular profit. Whereas investing essentially is a long-term view. You invest for 5 years, 10 years, 15 years, 20 years, say 40, 50, 60 years as well. So in terms of view, trading is short-term and investment is long-term. Trading is always related to emotions. It is based on sentiment. Say many times it will happen that a particular stock is running like anything, irrespective of its fundamental value. So that happens only at a time when people are crazy for that particular stock and they want to buy that stock at any cost. Whereas investing is always a decision not taken by heart but taken with a sound calculation and a proper long-term mindset. With trading, the returns sometimes are very high and sometimes the returns are in negative as well. So basically with trading, the returns are inconsistent. Whereas with investing, if you have chosen a right stock, right commodity, right property, the returns are going to surge year on year and you will keep on getting good returns. Majority times, people do trading without a specific goal in their mind. Of course, they have a goal that they want to have good profit. But having profit, say 10%, 20%, 30% cannot be a goal in itself, because once you have that particular profit and you have that profit in your own account, what you are going to do with that profit is another question. And is it possible year on year, month on month, days together, you can keep on getting the same profit? Whereas when it comes to investment, since it is a long-term view, you are not betting on anything. You are basically looking after with the intrinsic value of a particular product. Hence, with investment, you always have a particular goal in your mind. The goal could be anything. You want to buy a new car. With a proper investment of 5 years down the line, you will have such a profit that with the profit, you can buy the car. Or maybe another goal could be your child education or your own retirement over a long period, say 20 or 30 years. In the beginning, we tossed a coin just to prove our point that with trading, there is always a probability of loss as well as profit. But with investment, since the decision has been taken with a sound mind and a long-term view, with focus on the intrinsic value of a particular property, commodity or stock, more often than not, you always land up with a good profit. Another differentiation between trading and investing is with trading, since you are doing the trading on regular basis, there is a huge margin or a huge commission or huge brokerage which you have to pay. If it is not a brokerage, then there is always a risk which is involved that a particular trade would go fail or some trade would go in the positive. With investment, since there is a passive investing approach, the overall cost of investment is very low. With trading, generally the risk which is there with your capital is very high, because you never know which trade is going to falter with you. But with investment, since it is a long-term approach, you have a better possibility or good possibility of having good returns over a long period. Normally, it is observed that trading happens when the markets are on its peak. Why it happens? Because there is a herd mentality that everybody wants to chase the market which are going on a high. And when market starts to crash, everybody who has come in the market just for the sake of profit gets panicked and gets out of the market. So basically, this is a time when an investor comes into the picture and he chooses the right stock, right commodity, right property at the lowest possible price. So friends, basically with trading and investment, there is a difference of thinking. Another aspect is, with trading, you must have very high initial capital to have sizable profit. But with investment, we have beautiful mode or medium such as systematic investment plan by which you can invest into good quality stocks or good quality mutual funds with as low as 500 rupees per month. So in short, trading can give you short-term profit. It can give you emotional bursts of either success or a loss. But with investment, there is always a long-term peace of mind. Now let me explain you with an example. In a recent market fall in the month of March, let us assume that somebody has bought a company with a price of 1000 rupees. In the month of April, the price got shoot up. It went to 1400 rupees. In the month of May, it went to 1500 rupees. Now this particular person who has a trading mindset would start to believe that, okay, come on, I have got a 30%, 40%, 50% profit now. I should book the profit. At a cost of 1500 rupees, he might then come out of the market. He would sell all the shares. And what will happen after selling the shares at 1500 rupees, which he had already purchased at a cost of 1000 rupees, now he believes that I will buy those shares again if market falls. And yes, market falls again. But this time, market falls and price of the share becomes 1400 rupees. Now, once the price of the share becomes 1400 rupees, this person is again in a dilemma whether to buy or to wait. So he decides to wait. And as soon as he decides to wait, the price of the share, which is at 1400 rupees, starts to climb up. Then it becomes 1600. Now the person thinks, okay, let the market fall. This time, if the share comes at 1500 rupees, I will buy it. It comes at 1500 rupees after some days, but now he is again in a dilemma whether I should buy at 1500 or should I wait, or will it fall again. So in this dilemma of buying or selling, eventually he misses the bus. And then what happens? He does so many trades in between, small trades of having 50 rupees profit, 100 rupees profit per share. But eventually he gets, over a period of 6 to 8 months, when the price of a share from 1000 rupees becomes 2200 rupees, he actually does not get 1200 rupees profit per share because he has done so many trades in between. He lands up getting a profit of 500 or 600 rupees because at every trade he is in a dilemma whether it should go up or it will go down. Another beautiful example of investment I would like to share with you. This example comes with my investment guru, Mr. Warren Buffett. It's a beautiful example to differentiate between trading and investment. It was in 1962 when my investment guru, Mr. Warren Buffett, bought a company by the name of Berkshire Hathaway. He bought that company share at a cost of approximately $11 per share. Since 1962 till today, he has never sold a single share of that particular company, and today the cost of that one share of Berkshire Hathaway is somewhere around $3,20,000. This is a typical example over a period of 40-50 years when you get tremendous returns. Now, how much return Mr. Buffett has got with Berkshire Hathaway? Let us try to calculate that. Let us put it in a perspective. He has got a return of around 19% year on year with Berkshire Hathaway for over 58 years. So, again, let me make it simple for you. What does it mean by 19% return? 19% return means every 3.5 to 4 years, your amount of investment would get doubled. So, in 60 years, you can imagine how much wealth Mr. Buffett would have accumulated. And there is no surprise that Mr. Buffett is the richest investor present on earth. So friends, today we tried to discuss the difference between trading and investing. Now again we will be in a dilemma whether should I go for trading or should I go for investment. So let me simplify this for you. First of all, you must hire a good financial consultant who would understand your thinking pattern. A consultant who would be able to identify your risk-taking ability, and accordingly he can suggest you whether you can become a trader or you can become a long-term investor. Another thing, let us assume that your monthly income is, say for example, 1 lakh rupee. Now in that 1 lakh rupee income, you have monthly expenses for your family of around 30,000 rupees. There is a EMI of around 30,000 rupees which you have to pay because you have bought a home for your family. Now 60,000 rupees has already been exhausted. Out of remaining 40,000 rupees, after sitting with your financial consultant, you have come to know that there are particular goals which you should address, and the goals are long term. For example, your child education, child marriage, and your peaceful retirement. For all these goals, your consultant has suggested you that you must invest around 30,000 rupees per month. So what are you left with? 30,000 rupees has gone into EMI, 30,000 rupees your family expense, 30,000 rupees you are supposed to invest for your better future and future of your family. So you are left out with only 10,000 rupees. So out of that 10,000 rupees, 5,000 rupee you can keep in your saving account for any emergency as such, and remaining 5,000 rupees perhaps you can think of trading. But please try to understand, it should not be the other way around. It should not be like you are putting entire 40,000 rupees for trading and then you are not investing anything for your future and the future of your children. So please remember, you should always plan your money in a way that your long-term goals and investment should be the priority, and after setting aside money for your long-term goals, if money is there with you and if your financial consultant suggests you that you have high risk taking ability, then only you should go for trading. Friends, I hope you would have liked this video. Please do subscribe to our YouTube channel, and we are also available on Telegram and Facebook page. So till the time we meet for the next time, please do take care of your health. Stay safe, stay happy. See you soon. Bye.